in the last 1 year. And I've got this trend graph from Yahoo Finance, and this is a 1 year data, right? Just 1 year data. So it starts from January 2020, and today is 3rd of January 2021. So it's just 1 year of data, and you can see that the price level is pretty constant for large part of the year. There's slight increase, but there's a huge increase in the last 3 months since October. Question is, can you can you build a prediction model, time series forecasting model, which can predict such a movement? Now, in time series forecasting model, what you do is you take a year of data and then predict couple of months, right? Time series forecasting is reliable for short-term forecasting, but less reliable for long-term forecasting. So you would obviously forecast for 3 months or 6 months into the future. Now, can you sort of predict this huge shift in the price level for Bitcoin? Now, if you take the the data from October 2019 to October 2020 and build a time series forecasting model, it will never be able to predict the trend that you see after October, right? Why? Because such a pattern didn't exist before that. And if there is no such pattern in the historical data, it can no way predict the same pattern in the future because it didn't exist in the historical data. Now, some might argue, well, why don't we take more data, right? Why just take a 1 year data, right? And let me show you the 5 year trend. Okay, 5 year trend. So here you see there's just once where there's a huge shift in the price, right? It's, like from 1,000 to it went up to 15,000. I think towards the end of 2017, the price of Bitcoin was somewhere around 16,000, 17,000, right? So there's a massive increase in 2 years from 2016 to towards the end of 2017. That's just the ones, right? But it continued to be be very volatile and hovering around $10,000 for 2 years until, in fact, more than 2 years until October 2020, and then suddenly increase. Now, these sudden increase once in a while is very, very random. There seems to be no pattern in this, and therefore it's very, very difficult to predict such a movement of any economic indicator for that matters, not necessarily just Bitcoin. It applies to other economic indicators. The good thing about so the problem with Bitcoin is that it doesn't have an intrinsic value. Well, many might disagree with me, but there's no intrinsic value of a Bitcoin, right? It's just a number in the database, nothing more than that. Unlike other commodity prices or stock prices, or to take any other financial instruments, other financial instruments do have intrinsic values, but Bitcoin doesn't have that. Hence, it's a bit difficult to sort of rationalize through some scientific theories. So that's a bit difficult. There's too many factors involved here, and hence the movement is very volatile, and you can safely assume that it's more like more of a random movement rather than movement through any proper macroeconomic. I mean, there are some drivers driving the movement, so that's less likely. Qualitative analysis might help, but quantitative front, it's the simplest time series models won't be able to predict such a pattern. It's practically impossible. There are some ways in which it can definitely be predicted, not to the extent that you see like 3 times jump in a matter of couple of months. That's practically impossible, but you can predict maybe a jump a couple of percentage or so on and so forth. So that's something we will talk in the next few slides. Now here the lifetime movement of Bitcoin prices, and you see that um, constant for a very long time, like for the first many years up until mid 2017. It was less than even 2,000 or 3,000 for I don't know, for 5 6 years. I think since the inception, it wasn't more than that, and all of a sudden for 2 years it went up, and then with pandemic hitting, slightly increased, and in the last 3 months you see it's going up like crazy. um, but such things do not happen, um, right, just happen once in a while but do not happen uh, more often. Hence, time series analysis, especially the univariate time series analysis, are pretty useless in predicting such a thing. Some might try. I was going through some of the blogs. People have tried even the more of machine learning techniques such as LSTM and all to predict Bitcoin prices. But if you do a proper backtesting, I think because the problem is that they haven't really shared the backtesting results and all, it won't really fit your data properly, especially with the changes that we have seen in the last few months. Okay, so some challenges with the traditional statistical analysis, in particular time series analysis. Well, it's not stock. Well, in stock also time series analysis does a very bad job, but there's still some hope there. Because stocks have some intrinsic value. There's some macroeconomic theories that explains the movement of stocks. So you can explain some theoretical models to work well there. But crypto, there's nothing much out there. I mean, there's not a lot of literature on crypto as to what drives crypto prices. I mean, it's yeah, most of the information that you get on crypto is just some random movement. There's nothing really that is directly related to, it's not like GDP is going up in advanced countries, and hence crypto is going up or something. That's not, no such relationship as such. And then short term and long term. Time series modeling helps in short term forecasting, but not in long term. Problem with crypto is that in short term, it's you better assess yourself qualitatively rather than using some quantitative techniques. Uh, for example, during pandemic, you expected that crypto will do well. So that's more of a short term forecasting, because we just started a couple of months back. Because in long term forecasting, where you need bunch of lot of data to help you out predicting the future, here it's problematic because the pattern in the historical data doesn't really help to predict future. So that's another issue. Then too many factors driving the volatility. Okay. um, and most of these factors are actually not the traditional macroeconomic factors that drive, say for example, stock prices. These are mostly sentiment related. These are speculations and things like that. Um, so historical data is unable to capture such information that's floating around. And then last year, the explainability. Well, time series analysis is very good when it comes to explain movement of something in the historical data. And that does not help, right? Because you're not interested to understand the movement, you're interested to predict the future price. So that also is of no use. It's of some use to academicians, but if you are a practitioner, you want to make money out of using these models, then of no very little use. However, there are some things you can consider if you are more of a researcher and trying to sort of build a model that will help you make maybe um, uh, making some money on crypto market. So first thing is to never believe in long-term forecasting models, because it's a bit difficult. So always maybe keep a short-term eye, like 3 months, 6 month forecast. Probably you can, like for example, if you use last year's data and try to forecast the next 3 months prices for crypto, for Bitcoin or other cryptocurrencies for next 3 months or 5 months, 6 months, probably you might have some level of accuracy there. Explore many other macro variables, not just the historical data for crypto, but also other macro variables that might be of help. So check the causality of other macro variables. Just try to get as much data as possible about, and to check whether that helps There's not much literature out there, if that helps, but you can try out. Qualitative analysis is very important because it's mostly about sentiment. So quantitative analysis alone cannot uh, help much, but if you supplement that with some sort of qualitative analysis, then probably yes. And then unconventional analysis is a bit undervalued in academic research, but as a practitioner you can also get data from Twitter and see what people are talking about, because some of the influencers on Twitter and other places, right, on social media, they also drive the crypto prices sometimes up, right? Then quite a few actually on Twitter I've come across who keep on tweeting about some, all the wonderful things about crypto, and then people start buying, and then there's a huge demand, and then it drives up the price and so on. So yeah, so those things also you should have a look at. So so to conclude, it's very difficult to predict the prices of cryptocurrencies, but to a large extent you probably can get some sort of indication if you do a proper research, but not necessarily using the traditional ways, but also exploring more unconventional and non-traditional ways, such as Twitter sentiment analysis.